Hi, this is Patrick here from the YouTube channel, Facebook group and social media platform for all PAYE workers and their employers to ask and get answers to their questions. The YouTube channel, Facebook page and group are all called Payroll Matters in Ireland, and new members and subscribers are always welcome. Today I want to talk to you about year of marriage tax relief and entitlement to the single person childcare tax credit in the year of marriage or civil registration. In the year of marriage or civil registration, both parties or spouses will be taxed as single individuals for that year of assessment. However, additional relief for the year of marriage or registration may be available on review if the aggregate of the tax payable by the couple as single individuals for the year of assessment exceeds the tax that would have been payable if the couple had been jointly assessed to tax throughout the year. Tax relief. The tax relief is calculated using the formula A multiplied by B divided by 12, where A is the amount by which the sum of the tax payable by the couple as single individuals exceeds the amount that would have been paid had the couple been jointly assessed for the whole of the tax year, and B is the number of calendar months during the year for which the couple has been married or in a civil partnership. For the purposes of calculating the number of applicable months, part of a month is treated as a whole month. Any overpayment of tax to be repaid will be divided between the couple based on the tax paid and payable by each individual as single individuals on their respective total incomes for the year of marriage or registration. An example. This is just one example for demonstrating the process. For members of the Facebook group and subscribers to this channel called Payroll Matters in Ireland, you do not have to be concerned about the detail of how the calculations are made, as we have a calculator that will do the calculations for you based on your individual earnings in the year of marriage. And the best part is that all you need to know in order to get the answer from our calculator are three pieces of information relating to your personal circumstances, namely the month of your marriage, and the taxable income of both you and your spouse or civil partner for the year of your marriage. How easy does that sound? Please be aware that all the calculator's advice and answers to questions on any of Payroll Matters in Ireland platforms are absolutely free, and there is no strings attached, emails required, etc. So please feel free to join, like or subscribe to any or all of our platforms. Firstly, I just want to convince you of the accuracy of the calculator with one simple example as outlined on the official revenue website. You can see here that the couple were married in July 2024. One spouse will earn €48,000 and the other €24,000 in 2024. Revenue have gone through in the calculations regarding the tax payable at 20% and 40% for the spouse earning €48,000. The other spouse only pays at the 20% rate. As a jointly assessed couple, they do not pay tax on any income at the 40% rate. The tax credits as jointly assessed are the same as the total of their credits as singly assessed at €7,500. I'm not going to go through the rest of the details as our calculator does all of this. You can see here that A is the amount by which the tax payable as single individuals exceed the amount payable on the joint assessment. B is the number of months in the year for which the couple was married. The couple married on the 10th of July. Note, PRSI and Universal Social Charge, USC, are ignored for the purposes of the examples. The tax treatment illustrated above is the same for married couples and civil partners. Now, let me enter these three pieces of information into our calculator to test it. Result is the same, only a lot faster. I will show you where to find this calculator just after I give you a few little pieces of important information. This example shows the benefits of opting for joint assessment. We at Payroll Matters in Ireland always advise our members that from a financial perspective, a married couple or civil partners can never be financially worse off for being jointly assessed, but they may not always be financially better off, as in the cases I am going to demonstrate next with the aid of our calculator. If neither spouse or civil partner earns more than €42,000 in 2024, then there is no repayment or refund due to either in the year of marriage. In this example, the couple earned €42,000 and €38,000 for the year and are married in March. As neither of them exceed the standard rate tax band of €42,000 in 2024, they are not due any refund. The next example where there is no repayment or refund due to either in the year of marriage is where both spouses earn more than €42,000 in 2024. If both spouses or civil partners earn more than €42,000 in 2024, then there is no repayment or refund due to either in the year of marriage. In this example, the couple earn €44,000 and €42,500 for the year and are married in May. As both of them exceed the standard rate tax band of €42,000 for 2024, they are not due any refund. You can also use the calculator for the years after marriage or civil registration by choosing the month of January from the drop-down menu. For example, if you were married in 2023 and you want to know the full year saving for 2024 between being taxed singly or jointly, you can see here that for our original example that the saving for the full year is €1,200 for a couple with one earning €48,000 and the other earning €24,000. When using the calculator for a subsequent year, you can ignore the last two rows as these only relate to the year of marriage. Remember that there are circumstances where the capacity to earn may decrease during a year. For instance, if one spouse reduces their working hours. In cases such as these, the better option financially is joint assessment. In many cases, either spouse may have had an entitlement to a single person child care credit in the year of marriage or registration of civil partnership. The entitlement to the single person child care credit SPCCC, which replaced the one parent family tax credit OPFTC from the 1st of January in 2014, is determined by reference to the circumstances that apply on the 1st of January in a year of assessment. If a couple married or entered into a civil partnership after the 1st of January in a year of assessment, and prior to that date either individual was entitled to the SPCCC, the credit should not be withdrawn from that individual in her or his individual tax computation for the year of marriage. However, when determining on review if any additional year of marriage or registration relief is due, the SPCCC should be excluded from the computation of tax payable under joint assessment. SPCCC is not available to an individual entitlement to the joint personal tax credit under Section 461A of the Tax Consolidation Act. The SPCCC is withdrawn for future years from either individual who had previously qualified for it. Before I give you the location of the calculator, can I request that you please consider liking this video or subscribing to this channel if you have not already done so, in order to keep up to date with payroll matters in Ireland and to help us continue making helpful videos like this one. Don't forget that you can also join the Facebook group Payroll Matters in Ireland if you are not already a member. The calculator is located on our website, Boyle Payroll Project Management, www.bppm.ie, as you can see here on the screen. Open the Resources tab by clicking on it, and on the drop-down menu, choose the Year of Marriage Tax Relief Calculator. Now you just enter the three figures as we have advised to get your answer. Thank you to everyone that has already hit this subscribe button, and thank you for watching, and I will see you next time.